Morning, everybody. It's another Wednesday, which means it's time for What the F Happened. Joined here by Mr. Snaggy. He is hot off of a plane, landed about a little after 1 a.m. I landed the day before at 3 a.m. So we are both back and ready to do this show, to talk to all of you about what's been in the news if you've been watching. But see, it's summertime, so a lot of people are actually out doing things and not paying attention so much to the news. And that's what we're going to cover today. We're going to pick up the pieces that are important and leave out all the nonsense. And that's what we do on What the F Happened. We rant, we rave, and we will argue if we want to. So, folks, stick around. We'll be right back after this. All right, folks, we are back at it for another week of What the F Happened. We got a little bit of news. I wouldn't say there's a lot of news, but it's summertime. You know, usually in the summertime, the markets are kind of uneventful. Got a lot of, just normalcy going on, but there is no normalcy. I mean, you've got the rates just came out, or the rates are coming out today, but we got the inflation numbers came out yesterday, so we're definitely going to hit that. We're going to talk a little bit about Jerome Powell, but I think at this point it's mood point because it's probably already built into the markets what's going to happen. So we're going to hit that. I've got some white papers here. I want to talk about the Titanic syndrome. That's right. And it has nothing to do with a boat, but I'm sure that's where the name came from because you all know what happened with the Titanic. Yeah, it hit that iceberg, and you watched the Leonardo DiCaprio movie, and the Titanic went down. So you can only guess what the Titanic syndrome is. But I also want to talk about a couple other things. I want to talk about oil. I want to talk about the impact of interest rates on U.S. debt and what that means for the United States and their debt payments. And I want to talk a little bit about that pesky, debt ceiling that we just got done with, which, now is moot point because they all made their decision. They made their concessions, a percentage point here, a percentage point there. They came to an agreement to avoid, oh my God, catastrophe. But it wasn't going to be catastrophe anyway. It's all a ploy, folks. It's like, look over here, folks. Look over here. Don't look at what's going on over here, only over here. And then our good old boy Trump is back in the news with more indictments, so we might as well touch on that as well since it's in the news. That's what we got in store today, and we will be watching your questions, and we'll be hitting on those. Stephen, you were just out in Vancouver, so talk a little bit about what happened out there and what you heard about. I don't know if so he was out attending a conference for one of the giant mutually owned insurance companies that we use for BYOB, Be Your Own Banker, and the money multiplier method. So when he was out there, that company will usually report on they'll have their investment team come in and report on what they're seeing in the economy, in the future markets, and how they're building that into their general portfolio. I was actually out in the Bahamas at a similar conference for another one of the giant mutually owned insurance companies. So I got to hear a little bit about what they're building in. They brought in a guy talking a lot about like the upcoming elections and what that's going to mean and what they're seeing there. But it was pretty interesting. Stephen, hit a little bit about what happened out in Vancouver.
Yeah, absolutely. So it's out there for the past week, and it's from the conference standpoint, it's always interesting to hear from the economists and the CEO and the executives of the company, marketing, what they're expecting, what they're looking at. And one thing was very common. Last year was a tough year in the markets. And, it took them a little time to figure it out. They were very well proportioned, very little amount of money in equity markets and any kind of risky assets and things of that nature. So they're very on track. So talking about this year, just how they've kind of, worked through that last year and feel very confident about all the moves that they've made. They're expecting kind of the continuing trend of the markets continuing to kind of fluctuate up and down. The Fed, still at the interest rates. And we'll talk a little bit about what the Fed is going to announce today after the inflation report yesterday that came out. But at the end of the day, they feel pretty confident about how they're positioned and, do expect some rocky roads ahead. Got a little bit into real estate and, their thoughts on some of the bigger commercial real estate out there, and how they backed way off of that. They're kind of expecting some declines there. And so it's very interesting. But one thing I'll add, Chris, just about Vancouver in general is, in a different country, and, Canada's so close to us yet so different. And, we heard a lot about Canada during COVID and some of the different, restrictions they had there and lockdowns. I got to tell you, being in Vancouver and spending time was actually really refreshing. And I don't know what it is, just a different mindset I feel like that people have there. I've spent a lot of time in big cities in the US and around the world. It just seemed like people in Vancouver seemed to really want to work. They wanted to like the customer service was really good. Like even at like smaller restaurants or even like convenience stores and things like that, like the people just seem to be happy to be there, like wanting to work. And it's just such a stark contrast, I feel like, to what we experience in the US. Here in the last really year or two, I feel like it's been kind of getting even worse and worse as far as just from like a customer service standpoint. And when you go out, the way people treat you and just act in general. And, I flew back in Newark and I had a few hour layover in Newark, and just at the airport, it's just like the restaurant, the stores, the people, like it just seems like nobody wants to be there. And it's just a weird dynamic. I feel like we've talked a lot about it, Chris, lately, with just, kind of the way that the world is headed right now. And it was just very interesting contrast. But at the end of the day, it's one of the reasons to get out there and travel and experience new places and new things, because it kind of just changes your mindset a little bit on just the way to look at, just everyday life. So it was a nice, refreshing trip. I had a great time. It's absolutely beautiful in Vancouver, and job well done to that city for everything that they're doing. And I'm sure they have their challenges. I didn't really get into that part, but it just was it was a cool trip all around, just to kind of feel that out.
Well, we got a comment coming in, and it might make a little bit of sense. W. West on TikTok said the reason the Canadians are all happier is, he said, they're all high. I guess there might be some truth to that. Who knows? But, there's a lot to be said about that. I mean, definitely in the States, I think during the pandemic, a lot of people got handouts. We got really comfortable getting handouts. We got comfortable not working the traditional way. And, to kind of lead into that, Stephen, I'll come right over here to one of the news articles that I was reading earlier regarding Google. So one of the things Google is doing is, telling their employees they have to come back to work. They want their employees, I think it's 3 days a week, trying to find the article here, 3 days a week, they want their employees back in the office, and their employees are pushing back, and they're saying, measure me by my work, not my badge, and check me by my work, not my badge. So I guess there's some truth to that, but
yeah, but at the end of the day, it's a sense of entitlement, I feel like right now that people are going through.
I think it's exactly right. Keep going with that. It's a sense of entitlement. So during the pandemic, we couldn't go to work. Well, some couldn't. I mean, I showed up every day, but that was because we were in a different industry where we were allowed to. But, the entitlement is like, now people are comfortable working at home. They're doing that. And now they don't want to go back. And when they're told by their employer that they got to come back to the office, they're pushing back and griping about it. And that is a sense of entitlement. And I think when you really look at what's going on, in this country specifically, I'm sure it's other countries as well, but we definitely have an entitlement problem. And you can see it. You can see it with voting. You can see it with politics. You can see it all around, and you can definitely see it in the workforce. And listen, Stephen, just like you said, I see it as well. Like the service is just not what it used to be, and I'm not the guy that goes out to the restaurants all the time and really pays a lot of attention to waiters and waitresses and the service, but you can just feel it, right? Just out there when you're doing things, there's just less service. There's less happy people, well, cats are always happy. So if you want happiness, just get yourself a nice kitty like Lazy Cash here. But there's definitely a big change in that since the pandemic. And I like to think that it'll come back. We always used to joke around with our company, Private Money Club. We're going to make customer service great again. And one of the things we did there is we made customer service a priority, not a secondary. And I think a lot of companies have a lot to learn. Now, we could all take from the playbook of the Ritz. If anyone's ever stayed at the Ritz, how many of you have ever stayed at the Ritz? If you have, just in the comments, put Ritz, R-I-T-Z. If you've stayed at the Ritz, I don't care where you stayed at the Ritz. I don't care where in the world you stayed. Their customer service is one to be admired. I mean, literally, you go there from the second you walk in the door to the second you leave, you feel like they truly care about your needs and about you having a good time. Stephen, you ever stay at the Ritz?
Yes.
Like, what was your experience with the Ritz compared to maybe another hotel chain? Not naming any.
Well, yeah, I mean, the Ritz, I mean, that's what they've always been known for, is the service. You ask somebody a question, they don't just point you to it, they walk you to the area. They're very good at, just all things customer service. It's world renowned. And you're seeing that. I mean, you're seeing the tough part is you see that only when it gets to like higher class. So I feel like it used to be good service all around, and like we're talking about, it's been coming down. And one thing that you see in real estate right now is a push towards that. Like some of these high-end residences, the Four Seasons residences, the Ritz-Carlton residences. We were talking about this last week actually on this show, how those kinds of condo, what do you call it? Those kinds of communities, I guess, are in huge demand right now. Like people want that really badly right now. And I think that it's in such high demand because we're not getting it anywhere else right now. So if I was a company, and Chris, I mean, you've been kind of talking about this for years, so you're definitely ahead of the time. But if I was a company right now, like that's where my number one focus would be: customer service, customer support, and treating the customer like they're golden. Because I guarantee you, your competition is not doing that right now. So if you just focus on your customer, I guarantee your business is going to grow. And that's one thing we really try and focus on here with Money School and Private Money Club is kind of that idea, the Ritz-Carlton service. And I feel like that's kind of be the next wave, especially as like AI starts to come in and, computers are doing more and more of the work. Like people are going to want that human connection, but they're not going to want that entitled a-hole that feels like they're at the job because they have to be there. They're going to want to deal with somebody that wants to be there. I mean, at the end of the day, that's what it's all about. And I think, you hate to say it, but people get spoiled, and I feel like this last 10, 12 years of just this crazy run of the stock market and real estate markets. And you could throw a dart at any investment and it made money. And I just feel like people have gotten spoiled and they almost expect that now. And I think there's going to be a rude awakening coming. I really, really do, Chris. I think it's going to be really hard too for people because they have gotten used to this lifestyle and this way of being. And I just don't see it continuing forever. I just don't see how it can.
I agree. But I think what you said there, I think the silver lining to everything we just talked about the lack in customer service, the lack of motivation for people wanting to go to work and actually do more. Someone had made a comment. I lost it now, but it was something about, like people making $12 an hour. When I go to a restaurant, my server making $1.12 an hour isn't happy. But servers make money on tips, and tips are increased. I know I tip more when the service is good. So if a server is focused on what they make an hour, they're in the wrong business. Like they literally need to quit their server job and go work somewhere else for a higher wage. Because if you're a server, your wages, your money. I just was at the Newark airport, right? And I went to BurgerFi to get my veggie burger. I just love those things. But I sat at the bar, and the server, the bartender, I guess, or server you would call, was phenomenal. He was communicating. I watched him because I usually just sit there and observe. I watch him communicate with each one of them. He would find commonalities. One guy was talking about cars, and he's like, "Oh, Infinities, those are really nice cars." Whether he believed that or not, but he started the conversation, and he got into a conversation with everybody. The one girl sitting next to me, he made a comment about her nail polish and how nice it was. He was very good, and I'll bet you any money everybody there tipped him more than they normally would have because he made them feel good. He found commonalities. He was focused on making them have a good time and focused on them. And when you're a bartender, a server, anybody in the service industry, you don't work for an hourly wage. You work for your tips. And your tips are solely it's kind of almost like a commissioned salesperson, right? A server and a commissioned salesperson really operate on the same pretense of the better I do, the more problems I solve, the more service I give, the more money I make. That bartender there, trying to remember his name. It was, oh gosh, it'll come to me. But I mean, I would never remember somebody's name, but that's how good he was. He will make more money because he's good at what he does. because he's not focused on an hourly rate. He's focused on his tips. And you know how I know this? I asked him, I said, hey, how long are you here? Because my layover was like, after the delays, it was like 8 hours. I said, how long are you here? He's like, well, we're open until 10, but I'll probably start shutting down at 9 because the bar really slows down and I don't make much after that. You know what that means? That means he knows how he makes money, and that is by serving the customer's needs, goals, and making them feel good, which is tips. So anybody that works in a job like that doesn't like their wage is because they're focused on the wrong thing. Okay, if you want to make more per hour, go get a job that pays more per hour, and then you're stuck in a 9 to 5, and you're never going to make anything more than that because you got the wrong mindset. It's the people in sales. So like people always say, and if you've read The Greatest Salesman in the World or any book, the highest paid profession is sales. Why? Because you're in full control of what you make. You're not relying on a 9 to 5. You're not relying on someone's month or hourly rate. You're not trading hours for dollars. You're trading your service. Your job rewards you in pay. The better you get at your job, the more you do, the more problems you solve, the more money you will make. Sales is the highest paid profession that there is. And other people are like, oh, no, CEOs. I bet you any money you can't find a CEO that didn't have a sales background. I bet you any money you can't find one that didn't come from sales in one way or the other, because they need to understand that aspect. You see, a CEO becomes a CEO usually because they climb the ranks of the company. Not always, but usually at some point in that CEO's career, they had to climb the ranks. You know, it'd be like if you wanted to own a restaurant, you're going to have to start at the dishwasher, go to the prep cook, then maybe become the cook. Then maybe you're going to have to go out and work, you know, as a bus boy or bus, I don't know if they say bus girl, but whatever. I was a bus boy. And then maybe you become a waiter, and then you become a bartender. You see, you climb the ranks, and then all of a sudden you've worked all of the positions. So now you could own a restaurant and know how to run the restaurant. That's the problem. So many people want to get to the top, but they don't want to do the hard work to get there. They just want to be handed shit. And guess what that's called? Fucking entitlement. That's what that's called. Had to get my swear word in there, Stephen.
Yeah, no, it's funny you say that, because when I was a waiter for a short amount of time, but when I would always calculate in my head, like every tip I got, I would take the amount that I had earned and I would average that out over the hours that I was working. And I would always know in my head what my hourly wage was, including tips. Like I was always calculating, because I'd be like, if I can get an extra $5 from this table, then my average goes up to like 11 an hour from 9 or whatever. Like I was always pumped about it. So I hear you there, but it's yeah,
it's so funny. Like, you know, we're sitting here talking, we got a cat sitting here, and you know what TikTok's comments are about? My watch. So this is a Nixon watch. It's not an expensive watch. It's not, I don't wear Rolexes or whatever, all these other fancy watches. It's a Nixon watch, and it was a birthday gift for me. So Devin got me this for my birthday. I don't know what these cost, few $100, I would guess. And you know, some of these people on TikTok, that watch is grotesque. Each their own. I mean, I'm not sitting here because I want your opinion of my watch. I'm sitting here trying to like help you understand what's going on out there, help you maybe get in a better mindset. But it just shows you, and I talked about TikTok last time. You can tell, like, the majority of the people on TikTok, I can tell you what their wages probably are. I can tell you what they bitch about. And I can tell you that a lot of the people on TikTok are probably the ones we're talking about that are entitled. Because you know what they're saying? They're saying the biggest problem is that companies make huge profits and the employees barely make livable wages. That isn't the problem. That's a mindset problem. Now, do companies make big profits? Yes. Is that what they're in the business? And if you were the CEO or the owner of those companies, would that not be what you'd want? To make big profits so your stockholders make more money and so you can do more? Now, I'm not saying that all companies are good, but if you ran the company, your focus would be on exactly what you just said is the problem with companies. So maybe what that person, which keep on living for life, maybe what that company or that person's idea is, all companies should just be failing, and they should just pay all their entitled employees that are there, tried and trade an hour for $1 because they haven't figured out that their hour should be valued based on how many problems they solve and what they do. But they're focused on how much they get paid an hour for how little work they can do. And if that's how we did it, we just flip it upside down and we make it so companies don't make a lot of money, but all their employees make way more than what they're actually worth. That's how it should be, right? So, you know, it's backwards, folks. Like, you're worth what you do and what value you bring to what you do. I always tell people, you want to make more money, solve more problems. You want to make big money, solve big problems. That's it. It's that simple.
Well, here's one of the big problems too that we have right now is because I feel like politics has gotten so in your face with, the coming of social media and just the ability to share news articles and opinions on things like Facebook and Twitter and TikTok and everywhere. And it's because politics is just in your face all day, every day now. I feel like people have like turned to politics is almost like a type of religion, or not a religion, but something that when they hear it, it becomes part of their life and what they truly believe in. So then you have people that start putting all their faith into the government to provide them a happy life or more money or whatever the case is. And if you haven't realized it yet, politics are not going to save your life. All right. It doesn't matter who the president is. It doesn't matter if it's Donald Trump or Joe Biden or Ron DeSantis or Bill Clinton or Hillary Clinton or whoever it might be out there. It doesn't matter. At the end of the day, you're in control of your life. They're going to lie. They're going to lie both sides all day, every day. That's all they're going to do. So stop putting your faith into them. But here's what happens when you do that. Like, let me share this article. So the White House puts out a tweet yesterday. Great news. Today's inflation report shows annual inflation is now at the lowest level since March of 2021 and less than half of what it was in June. This is giving families real breathing room. In reality, inflation is in double digits over the last 2 years. And when you compare inflation to actual wage growth, we're in the deep negative right now. So people are making a lot less money when you factor in things like inflation to what they were just a few years ago. So, you have people that read this stuff, but in their real life, they know they're experiencing it the other way. It's like, it's a mess, man. It really is.
It is. As Chris Myers here on TikTok says, he says it's not backwards. You're just not telling the whole story. A lot of that with, corporate greed and that there's a lot more to the story than what I said and what they're saying. But it really just comes down to the one thing. I'm not talking about corporate greed. I'm not talking about politics. I'm talking about all of you that are taking your time, your energy to watch this show, to learn something new and help your life. So all I'm saying is, you want to make more money, solve more problems. Stop worrying about what other people are doing. Stop worrying about politics. Stop worrying about all the things that are out of your control, because whether you believe it or not, your vote for the most part doesn't really matter with electoral college. It really doesn't. I'm not saying don't vote, but if that's what your main focus is, then you're focused on the wrong thing. It all plays into the bigger pot, right? The bigger plan. But you should focus your time and your energy on things that you can control. That's why what we always say, Stephen and everybody in my company, like, they could all recite what it is we do and what our mission is. We solve people's money problems by putting them back in control of their money, back in control. So focus on things that you can control. You absolutely can control your money. You can absolutely control the outcome of what your money does for you. You absolutely can control your income. When people say, oh, I'm living paycheck to paycheck, I don't make any money, I don't have any money, you can control that. You are in control of that. It's your mindset that's broken because you don't think that you can. Listen, Steve Harvey's one of the best ones to listen to. Steve Harvey, if you really study his story, and so many others like Steve Harvey, you will find that they didn't come from wealth. They didn't come from riches. They worked their way up through doing the hard work, doing the things everybody else is unwilling to do. You want to make a lot of money. You want to be the next Steve Harvey. Do what everybody else is unwilling to do. But here's the other part that you've really got to get real clear with is Steve Harvey does this one thing, and I'm going to probably butcher it, but he talks about first class on an airplane. He talks about flying first class. Now, any of you on here that have flown first class, it's nice. You get treated better. Okay. The service is definitely better. Is it worth the money you spend? That's irrelevant for what I'm about to say and what Steve Harvey says. He says that once you go in first class, your mind upgrades itself. Okay. You upgrade your mind when you sit in first class. Now, some people get to go in first class because they get upgraded from economy, or maybe their company puts them in first class. A lot of times, most people sit in first class, not because they paid for it, but because some great thing happened that got them in first class. I know that's my story. I used to sit in economy all the time. And I said, why would anyone ever pay that much for a flight to sit up there just to get a meal and some cocktails? I can buy the cocktails back here. But then one day, I can't remember what happened. I think, I must have had a higher status, and they just, after I was sitting in economy, they came back and they got me and they brought me to first class. Now, when I sat there, all of a sudden, like as Steve Harvey says, my mind got upgraded. Now, all of a sudden, I'm in first class. I got more room. Okay. The service is better. The meal, but get drinks and all of that. It's nothing great, but your mind gets upgraded. Then all of a sudden, the next time you get back on the plane and you're sitting back in economy, you walk through first class and you say, I belong here. I should be here. You see, once you upgrade your mind, it's very difficult to downgrade your mind. And when you do it, you actually question it. And Steve Harvey says you should never do that. When you upgrade your mind or upgrade to first class, make sure that's the upgrade you stay at. And then the next upgrade, as you all know, would be flying private and doing all these other things. Now, I'm just talking about airplanes. I'm just talking about that one thing Steve Harvey said, but that is relevant for everything in your life. When you upgrade your life, when you upgrade your mindset, why would you ever downgrade? Seriously, think about that. It's a mindset problem, folks. That's all it is. When people on TikTok are sitting here saying, oh, it's corporate greed. Oh, why would anyone work harder when they make minimum wage? Why would they do this? That's a mindset problem, folks. Either you're in the wrong position for what your skill set is. And here's the other thing, too. Let's talk about education for a second. And we are going to get to the news, I promise. But this stuff is all relative. When you look at the schooling systems, right? So there's regular school, like I went through, regular elementary through high school. Okay, I went through all of that, and it's a preset curriculum. Yes, there's different programs, honors, and these different things, but it's a preset program. Now, let me ask you that: are all kids exactly the same in their skill sets? Not at all. So then, when you look at private schooling, and you look at, let's just talk about Montessori schools. Montessori is really a schooling that focuses on a child's strengths, not their weaknesses. And it also doesn't put children all in the same box that they all should be learning and excelling at the same rate. Montessori school really makes children and puts children in a position where what they excel at, what they enjoy, what they like is what they focus on pushing that child towards. Why? Because we're all different. We're not all in a little square box. We don't all, have the same skill sets, and we shouldn't. We're not put on earth. We're not put here by God to do the same things. Each of us have a unique skill set, and if we highlight that skill set, if we focus on the things that we're good at, and we kind of ignore the things we're not good at and that we don't have skills at, then all of a sudden we become great at what we do. And that can be seen throughout history. When people are put in roles, when people put themselves in roles that they're good at, that they excel at, that they want to excel at, they do exactly that. They excel. When people are forced into a role that they're not good at, and they're forced to focus on the things that they don't like, what do? They don't excel. They suck at that position. They never want to grow because they're not in the right position. In my organization, what I do is I find people that like doing a specific thing, and I put them in the role of what they're good at. And then also we test them with other roles, but when I can see that they don't like doing something, I very quickly move them out of that role that they don't like. Now, why is that? Because why would somebody want to excel at something they don't like doing? They want to excel at something that they do like doing, and then they get really good at it, and then they make a lot of money, which makes the company a lot of money. Now, some of you over here on TikTok would say that's corporate greed. It's not. It's excelling people at what they're good at and putting them in the positions and giving them the controls and the power to grow what they are put on earth to be great at. So all of you watching this, like, what are you great at? What do you love? What would you do for free? Find that role and excel at that. But also find somebody that will help you excel. Because you can find that role, start it with a company, and all of a sudden that employer doesn't understand that and thinks you are just like everybody else and thinks you should be good at things that you're not good at. Then you're never going to excel. Then you got to leave. You got to be smart enough sometimes to find the right role, the right people to work with, the right culture that allows you to grow with that company and then take that company over. That's what CEOs mostly do. Typically, they start at the bottom and climb up, and then they're running the company because they were put in a position that allowed them to skill up and scale up. Like, a lot of that is on you. It's your mindset. You're in control of that. Oh, I hate my job. Then get a different job. Oh, I hate my boss. He doesn't allow me to really work at what I'm good at. Then get another one. You've all seen Office Space, right? With the swing line stapler. Like, clearly, that dude was in the wrong role. Anyway. Let's get into some other stuff here. I want to come over here to today. It's Wednesday. Why is it an important day? It's an important day because Jerome Powell will announce what they're going to do with interest rates. And that will have an impact on the markets one way or the other. As of right now, the markets, the futures, well, no, I'm sorry, the markets are open now. The markets are down 87. So the Dow is down 87, NASDAQ's up, S&P 500's up a wee little bit. So it's stated that Jerome Powell is going to pause rate hikes for the moment. Let the market digest what they've already done. See what happens if we don't raise rates. And that's probably what's going to happen. Now they could come out and raise rates again, which, prior to the previous couple of weeks, that's what we thought they were going to do. The reports are coming out. The economy's still a little bit hot, even though everything's more expensive, like Stephen showed. Even though inflation, yes, although it's coming down, it's not good. Okay, it's still higher than it has been. Yeah, maybe not last year. Some people want to give credit to the U.S. government for where we're at with inflation. Just so you all know, interest rates and monetary policy is in the control of the Fed, not the United States government. The United States government actually did nothing really to get us where we're at right now. This is the Fed actions. And that went against Congress. Congress actually wrote a letter to the Fed saying, guys, you gotta go easy. You're hurting that. In other words, what they were saying, you're taking votes away from us. You're making us look bad. This is the Fed doing this, and it has come at a cost. But we haven't seen the real cost, but we soon will. So, Stephen, let me take what the Fed has done, okay, which is 5 percentage point increases in the last a little over almost a year now. They've increased rates 5 full percent. Okay, 11 rate hikes. And if they pause today, great. But I want to talk about the Titanic syndrome. When I said the Titanic, somebody said it's the biggest pirate scam ever. I mean, whatever you believe about the Titanic, let's just all understand one thing. The Titanic.
That's a good conspiracy.
Yeah, it is. I've read all that stuff, and when you read it, you're kind of like, well, I guess maybe, but it's irrelevant. Let's just focus on it was a really big ship. It was supposed to be an unsinkable ship, and it did sink. I think we all can agree to disagree, or however you want to say it, that the Titanic is at the bottom of the ocean. It was a tragic event. A lot of people lost their lives and a lot of other things. But I did read a cool story about a cat. We'll talk about lazy cash, but a cat that was on the Titanic that had kittens. And then at port, the cat took all of its kittens off of the boat and put them on the pier. I know that's completely useless knowledge, kind of like useless knowledge would be that I was at a cigar bar in Bahamas and Michael Jordan was there. Useless knowledge, but worth mentioning. So let me read this to you right here. This is the Titanic syndrome indicator calls that November 2021 NASDAQ top just gave the sell signal again. So I'll read this to you a little bit. So the indicator's triggered by new highs accompanied by sudden jump in the new 52-week lows. So how can that be? We're making new highs, but we're also making new lows. Understand that? So like in different sectors of the market, different indexes are making new highs. Okay, the S&P 500 is one to really look at, making new highs, where there's a lot of other indexes not mentioned, not talked about, making new lows. So when you have this happening, what that's basically saying is there's a complete inefficiency. If this economist that did this white paper actually wanted to be real about it, what this economist would say is dumb money is chasing the big S&P 500 stocks. So dumb money is flowing into the indexes that are making new highs. Think about that. Not smart money. So you don't see the money going into the Russell small cap. The Russell small cap or the Russell 2000, which is small cap stocks, higher risk. You don't see dumb money flowing into that right now. You see dumb money flowing into the same place dumb money always flows, the wrong place. It's flowing into the one that's going high. Somebody had mentioned, and I want to hit this because we're going to hit these comments. Somebody earlier had asked this, I think from YouTube, asked us about XRP, which is an altcoin, okay? I don't really know enough about XRP to even give you even the remote, solid advice on. I really don't, and I'm just being honest with you. But the one thing I can tell you about XRP is it's up 6% or $6 or something like that. I think it's up 6% when all the other altcoins are down. And when things go up, money wants to go into the things that are going up. That and please, Joe, don't take this the wrong way, but that's what dumb money does. Dumb money chases things that are going up. Dumb money chases the highs, and they buy high. Smart money buys low. Smart money chases the things that aren't going up. Smart money is going to the 52-week lows. Smart money, institutions, savvy investors, accredited investors that know what they know and invest in things that they know, like, and understand. You see, all I'm trying to say is the Titanic syndrome is simply an indicator of dumb money chasing the highs, as it always does. And what does dumb money always do? Loses the most. Why? Because they buy high and they sell low, where smart money buys low and sells high. There's a big difference. But going even into this, it references the Titanic syndrome, and what's happening right now is this is the greatest way I can explain this, and I'd like you all to comment in on this. It says the troops aren't following the generals. I don't think I can say it any better than that. The troops are not following the generals. Point made right there. So, right now you've got the larger S&P 500 making new highs, and you've got, a lot of these other indicators making new lows. And you know what this says? It says that the third wave is right around the corner. This is another indicator on top of the inverted yield curve, on top of all the other indicators there's signs everywhere, folks. We've been saying this forever. We're at the end of this cycle. A lot of people are like, oh, we're going to make new highs. We're going to keep going higher. Oh, put money in the markets, buy the indexes, put money in IULs. It's going to keep going to the moon. Those are the people that later are going to lose everything because they simply don't know what they don't know. And because quite frankly, it's dumb money, chasing dumb things, chasing the highs as always. And that isn't what you should do. So the forecast on this one, and I'll just read it. The forecasts have been around this next third wave or middle wave to take the markets down around 60% from the top in 2021, all the way back to March 2020 COVID lows. When this happens, these investors will lose a lot of the money that they've invested. There you go. That's when investors will realize that the Fed has lost the battle against the markets, and the markets will finally get the pause that refreshes the crash of a lifetime, and likely to see the final or fifth wave down that would bottom somewhere between mid and late 2024. So essentially what this economist is saying is we're about to go down. And just last night, my trader, Sodi, who runs our private hedge fund, also sent me something that signifies this. Now, I don't know if Sodi was reading the same thing, probably not, but he basically said we're going to probably push a little higher, maybe test the highs, but I think that we're going to bounce and go lower. And the reason he's saying that is he's just saying maybe this will create some opportunity. Earlier in the news, we mentioned opportunities are created when you can actually see through the problems that we face today. Some of the problems are service. So you want to rise to the top, make service great again. Okay, go out there and be better than the other people. Don't just follow the herd. Do what they're unwilling to do. Follow the generals. Follow the greats. You want to make more money? Look at how the CEOs got to where they are. How they made more money. Oh, it's corporate greed. No. How did they make their path? Okay, read Will, the book. Will Smith, the actor. Read his book. Read Matthew McConaughey's book, Green Lights. Watch their journey. Watch what they did. Both of those actors have done great things and made tons of money because they went against the grain. They didn't follow other actors. They did the hard work. They did what the other actors were unwilling to do. Just read the books. Tom Cruise, no different. Stephen, you want to comment on any of that? I know it was a mouthful and I probably said too much.
Good, man. No, I don't really have anything to add. It's spot on though.
Well, let's move to just a couple other questions. So we kind of hit XRP. I just don't know enough about it, but I would say be very cautious because don't follow the dumb money. Brian said, if this is a recession, is the government manipulation in the market? So I'm not really sure, Brian, what you're alluding to with that, but technically speaking, and maybe right now the technicals don't indicate we're in a recession, but we're right on the brink. We were, and maybe we've come out, but the signs are what you look at. The patterns are what you look at. We will be in a recession. No ifs, ands, or buts about it. When? That's what I can't tell you. It could be next week. It could be next year. As per that economist, we're going to see the lowest points mid to late 2024, which means right now would be the wrong time to chase gains in the market. And I think that's where a lot of people make mistakes. Stephen and I talk about this all the time. We talk about being realistic and never getting greedy. And I catch myself, or sometimes other people catch me doing that. Even though I teach it, sometimes I want to chase the big returns. There was this investment that we were looking at not so long ago that I actually did put some money in. It was brought to my attention, hey, you should be careful. That's unrealistic. you're maybe getting a little greedy. And then we dug deeper into it and we found, wow, there might be some issues with this. And then we kind of pulled back. And what we did is we set the warnings out. We talked to some of the people and we've course corrected, hopefully in time. But you see, a lot of people want to chase those big returns. Why? Because it's sexy. But right now is the wrong time to chase returns. Right now, look at everything in the news. Look at everything that's going on. This is the wrong time. If you're buying into the markets, you're buying high. Unless you're an active trader and you really know, like, and understand what you do, then you can make a lot of money in the markets because volatility creates opportunity. Bad service creates opportunity for every one of you and your businesses because all you got to do is go out there and do what everybody else is unwilling to do. You want your business to flourish? Do the hard work. You want your business to fail? Do what everybody else is doing. Just sit there and just act like, you're entitled and your business should be making money just because I said it should. Let's see. Going to Hawaii, we were talking a little bit about the Ritz here. Some people commenting on the service. And I don't think you'll ever find anybody that's been to a Ritz that says or complains about the service. So you want to model your company's service after the best, then just go to a Ritz and stay there for a night. And then pay attention to what it is they do and mimic it and do the exact same thing.
And let me say, like, employees at the Ritz, maybe they make a premium, but it's not that much more money. It's all in the culture. It's all in the training. It's all in the expectations up front. When you join the Ritz, you're going to be providing that service. And so you do it. And so it's not always about the money. It's more, a lot of times, just about how it's framed and how the entire company, operates. And so if that's the way you want to be, you have to lead from the top. You have to treat everything you do that way. It can't be, okay, we're going to do great service here, but we're going to, treat you differently. You have to do it all encompassing. And, there's a couple of good comments over here. It started with this one on top, actually, with Morgan saying, when an employee,
I love that.
When an employee realizes they're merely an asset of the company that needs to return a profit on their time, they have the insight to take back control of their time, take back control of the value of their time. Which I think is really smart, Morgan. And then, David would just say, a major problem in today's companies is they are not willing to pay for worth. They want to pay you the minimum and get the maximum performance, which absolutely. But, most companies do have a structure where, the better you are, the more money you can, whether it's moving up, whether it's bonuses, whether it's something else. And if you're not happy with that, then you need to find another place. And I know he was kind of following up saying, all companies seem to be that way, but, I don't know what industry you're in, David, or, you're retired now, what industry you were in. But that's not really been my experience. I've seen, there are good companies out there that will treat people the right way. And if not, then you got to go into a different field. I mean, somebody taught me when I was very young, if you accept, whether you're worth $1 million or, whatever, if you accept a penny, a dollar from a company, give it your all. Like, if you're trading any amount of money and you agree to doing that, give it your 100%. Otherwise, you're just going to be in this not happy world. And if you give it 100% and you're still not, if you still don't get out of it what you should be getting out of it, then you move on. And that's the hard part for people sometimes. But at the end of the day,
let me comment real quick on David's, because there's a lot of truth to that. And, let's just pick on one industry, the medical industry. Okay. So a lot of people in the medical industry probably would say the same thing David just said is, that they're just, that they're not, they don't value worth. And I'll give you an example of a particular specialist. He's in the medical field, but we'll just call him a doctor because he is a doctor, but he's a specialist now. He was in the medical field. He made great money by all respect. And he would talk to me a lot. He's a client of ours. He would talk to me a lot about how he gives it his all and he just, there's no upside. There's no, like, they're actually trying to always bring him down he's trying to do extra, do more. And the company he worked for always tried bringing him down. Just do the norm, just do what's expected. He wanted to do more. Well, eventually it hit a breaking point, and this particular doctor ended up leaving that cushy job, that W-2 job, all those benefits, the pensions, the match, and he left all that and went out on his own, created his own small little practice, focusing on what he was really good at and focusing on how he really saw that he could impact that industry. Can any of you just guess what happened? I mean, he got out of the role where they didn't value his worth, and he put himself in the proper role. And now what do you think he does? His income is more than doubled. He's got a whole bunch of people working for him that he also makes sure that their value is or their worth is valued. Let me give you another example. Folks, look at the guy right on the screen right now. Okay, Stephen. So when Stephen and I first met, he was working for my business partner. But my business partner eliminated his position. It was just, the position was kind of going away. It was in the seminar space. And Stephen and I talked, and I remember I was in a completely different financial place. I was actually struggling financially at this point. You know, I had just done what I just mentioned that doctor did. I just started on my own. I had left the Wall Street world, a cushy 6-figure, paycheck that I got without having to work all that hard because I put the time in. And I went out on my own to do this new thing. And Stephen, was looking for somewhere. And I said to him, hey, the most I can pay you is $2,500. Now, I want you to think about that. $2,500 to some people is a lot of money. To other people, it's not a lot of money. To Stephen, that was probably a fraction of what he was making previously. But Stephen did come over and basically work with me for that $2,500. And along the course of what Stephen has done is Stephen has been in many roles with the different companies I have. But I've found the strengths of what he likes. Him and I have spoken about his strengths, and we have put him in positions where his value is highlighted, okay? Where his value is illuminated. What he's good at is what he does. And if there's something he's not good at, I don't want him doing that. And I'm not going to tell you what Stephen makes, nor do I don't even probably know exactly what he makes, but it's significantly more than what he started at. But you see, what he started at was for him probably barely able to make ends meet. And I could say that story with a lot of people on my team, but I could say that story for a lot of you too. I bet you any money, if some of you, not all of you, probably very few of the TikTok people that feel entitled that they should just be paid the maximum amount for their hour because they haven't learned it's not their hour that they should be valuing, okay, or it's not the hour for the dollar that they should be valuing. Their time cannot be valued. It's priceless. It's what you put in that you're going to get out. And Stephen saw that. I saw that. And many of you have too. But sometimes it's very difficult to make that leap. It's very difficult to go from that cushy 6-figure position and make the leap into the unknown. But sometimes you're going to have to. And sometimes it's going to work and sometimes it's not. But if you fail, that's the best thing that could happen for you because it's the greatest education you'll ever get. If you see the lesson in. I mean, that's all there is to do. You just sometimes got to put yourself in the position and stop waiting for other people to put you in the position you think you are valued for or that you're worth. Put yourself in that position. And if they won't do it, well, remember the doctor that was making a lot of money that put himself in that position. I'm sure that was a difficult decision. I'm sure that was a really risky decision for his family. Did it pay off? Sure did. And I think you guys, a lot of you probably have to ask the same question. Will my worth be valued where I'm at? And if not, the decision is yours. You are in control of your life, your outcome, your financial destiny, your financial, future. You're in control of it all. But if you allow somebody else to be in control, shame on you. That's it. It's your fault, not theirs. It's not corporate greed's fault. It's your fault for putting yourself or allowing yourself to be in that position. Oh, I don't have any choice. If when somebody says I don't have a choice, if I were to ask them why they go to work every day, I guarantee you their answer is going to be because I have to. I got bills to pay. I got a car payment. I got a mortgage. I got to put food on the table for the family. I have to work. Wrong. You don't have to work at all. You choose to do that. And if you go to work every single day with that attitude, you're never going to get out of that space. You're always going to be working paycheck to paycheck. You're always going to feel like they don't pay you enough. You're always going to be miserable. You're not going to be happy with the outcome because you put yourself in that position. Now, I got a YouTube video, and I'm not going to go into it, about two people it's an example of two people that work in a really shitty job, working in a garbage dump on the conveyor belt where they got to sort through all the recycling stuff and grab poopy diapers. And it explains that. You guys should watch that video on my YouTube. It's phenomenal. It's a mindset thing, folks. Change your mindset and the rest will change itself. Let's see. Yeah, there you go. Larry just nailed it. I just read this. When someone says they don't have a choice, this is the choice they made. I almost feel like this is more of a mindset WTF. But we did hit a lot of things. I do want to hit one other thing here that's pretty important. And this is another white paper that I got from a different economist that said the great crowd out begins. And I just want to kind of talk a little bit about some of the problems right now that are faced, the U.S. government's facing with Jerome Powell and the Fed raising interest rates. You see, if all of you look at the debt in this country, it's pretty high, right? And they keep making more debt because why? Well, we're living in a time where literally we spend $1.20 for every dollar we make. And it might even be higher than that. Stephen, do you remember? Is it $1.20 or $1? Whatever it is, we spend a lot more than what we actually bring in. And, given that means that we have a lot of debt and we have to pay interest on that debt. So let me just give you a stat. And this is a wake up call. And the two politics, like Republicans and Democrats, this is what they really should be looking at instead of bickering back and forth. This is the problem at hand. It says worse than that, we're slated to pay almost twice as much. And when it says it's referring to the U.S. government. We're slated to pay twice as much in interest this year as we did last year, pushing up this expense from $475 billion to $850 billion. Why? Is it because they took on a lot more debt? No, it's because interest rates went up. And because interest rates went up, the interest rate on a lot of treasury bonds, okay, the debt the U.S. government has also went up. So even if the government created no more new debt, because of interest rates, their payments doubled. And that's a big problem. So what does that tell you? Well, that tells me one thing. There's probably a strong probability that in the next couple of years, when we're in this recession, the Fed will drop interest rates, and the government probably will have some influence on the Fed dropping interest rates to get us out of that recession, but also to lessen this burden on the U.S. debt. So if we know right now we're in a high interest rate cycle, and it could go higher, Jerome Powell could raise rates again, or raise rates in this year if inflation doesn't cool down. So we know we're in a high interest rate cycle, but we also know in the future we're going to probably be in a low interest rate cycle, because that right there, that's alarming, and they'll do something about that. What would be the opportunity? Well, you hear me talk about the inverse relationship with interest rates and bond prices of U.S. Treasury bonds. I think right there, you all can see where smart money is going, not the dumb money. Dumb money will never go here. Financial advisors typically will never tell their clients to put their money here because, I hate to say it, but a lot of financial advisors are just dumb because they're always chasing the winners as well, because that's the easy thing. That's what their consultants tell them to do. But where's the smart money going? That strategy I just mentioned that I talk about on all the 3 days, that I talk about on the wealth webinars. Treasury bonds, boring old treasury bonds. Why? Because that's where smart money is going, folks, because interest rates going up has driven the price of treasury bonds down. I just looked today, treasury bond prices are up because yields are down. And what does that mean for the future? Well, when interest rates go down, what do you think will happen with the price of treasury bonds? Of course, they'll go up. It's inverse relationships. Follow the smart money, folks, and you'll make a lot of money. But you chase the dumb money, you'll lose a lot of money. So pick what side you want to be on. Stephen, what else do we got going on this afternoon and tonight? We got some cool things happening, don't we?
Yeah. I mean, so we have the wealth webinar at 1 p.m. Eastern. We have the Ask Me Anything at 4:30 p.m. Eastern. So those are both weekly shows we do every Wednesday. What are we talking about on wealth webinar today, Chris? Do you know off the top of your head?
Yeah. So today on wealth webinar, we're going to basically be doing the second part of the challenge. So last week we did a challenge. It was really freaking cool. We started with the fundamentals, like Michael Jordan. Every time he stepped on the court, he focused on fundamentals, dribbling, footwork. So we focused on dribbling and footwork of money, the fundamentals. And then we did a challenge. So this week, we're going to see how many people actually made it through this week's challenge. And then we're going to go into recycling and recapturing money. So in other words, we're going to talk about how you all can build wealth through your own debts and expenses. Literally, the fastest way to wealth is through your own debts and expenses. And that's what we're going to talk about. And that's going to be the second part of this 2-week challenge. So join us at 1 p.m. Eastern by going to Chris Naugle, Naugle.com, and register for Wealth Webinar. It's a free training that we do every single week.
Yeah, and you can still jump into the challenge. We can kind of catch you up on the last few days of what was going on with that. And so that's a lot of fun doing that summer challenge kickoff with that. And then 4:30, you can watch on the YouTube channel. So at YouTube at the Chris Naugle, or YouTube at Private Money Club. We live stream just like this show on Facebook and YouTube. And that's with all our money mentors. We usually grab a beer and and kind of have some laughs and joke around a little bit and have some fun. But we do answer all the questions related to infinite banking and investing in the markets and what's going on right now. We get into all kinds of stuff regarding money and investing. So that's a lot of fun to get together with the team. And then we actually have a special show tonight at 6 p.m. Eastern. We're going to be talking about the Money Tank, which is a biannual event through the Private Money Club that brings together, I don't know, tens of millions of dollars and multiple opportunities in the real estate investment world, and brings people together to make deals happen and provides education over 2 days on how to kind of make that happen. So we got our Money Tank preview and highlight show at 6 p.m. Eastern this evening. So make sure you join us for that as well.
So in other words, it's an action-packed day. And like Rhino said, grab a beer and have some laughs with the team. That's what we do at 4:30. So hopefully we'll see you there. Hopefully we'll see you at 1 o'clock Eastern time for the Wealth webinar. And you'll take part in the second part of the challenge, learning how to build your own wealth through your debts and expenses. And then tonight, learning about Money Tank, private money, and how you can be your own bank. So that's going to be a wrap for this episode of What the F Happened. I know we talked a lot about mindset. We didn't talk a lot about the news, but we hit the high level things. But one piece of useless knowledge is, and I'll leave this out of the news, UPS drivers are on track to get air-conditioned trucks for the first time. With that being said, thanks for joining us for another episode of What the F Happened. We will see you next time.